Coinbase. There are a bunch of these cryptos that are getting the love again today because Bitcoin went from 65 last week to 72 today. Barclays is maintaining a sell on Coinbase, so they haven't been doing real well with that call. To be short it into the halving as we get closer to it might not be a bad play, Pete. It still isn't as high as it just got to recently. I'm seeing the same thing play out in BITO or MicroStrategy or any of these. Even though Bitcoin's pushing towards that record again, most of those stocks that track it are not.
And I look over and I see this Barclays guy, and sometimes I think these guys just want to dig their heels in even if they're wrong. And this guy, at least right now, his price target 179. Well, stock's trading 250 last I looked. So that puts him in a really bad spot. Now it's going to take a heck of a correction to get back down to that price that he's got out there right now. Year to date, we're talking about Coinbase being up over 63%. When you've got the kind of shorts that they've got 4 to 5% short. They've got free cash flow of $1.5 billion. And then you look at cash to debt, $2 billion. From a fundamental standpoint, looks pretty damn good. From the standpoint of, does Bitcoin maybe have anything left in the tank? Sure. But even if it doesn't, I think we're going to see a lot going back and forth, a lot of trade going on there. I think that fits up pretty well with Coinbase, John.
The more people that gain exposure to coins directly rather than through an ETF, which quite frankly, I'm sure your son, daughter, grandson, granddaughter, whatever, or maybe even your grandmother and grandfather could show you how to open an account and buy crypto. I don't know why you'd do it through an ETF necessarily and incur those additional fees. Coinbase gets, of course, that transaction volume. They do a pretty good job, I must say. Brian, you're doing a nice job.